What's up, everybody? This is Jimmy with Trading Decoded. It is October 29th, 2024. It's 4:08 in the afternoon. The market is closed. Today's title is Get In and Get Out. And the reason is because oftentimes when you get in and you like what you get, even if you don't like what you get, you go back in and you hope to add to and or fix what happened after the first time you got in, and you could start a snowball from hell, and you don't really want to do that. My philosophy is every trade involves risk, and the more times you take a trade, the more risk you're putting yourself in. And why take additional risks, especially if the one you did take was a good paying one? That's just my 2 cents. It's not for everybody, but that is what I try and teach. I try and teach you guys how to find the right setups so that when you scale, right? You don't scale until you've learned how to be consistent. Once you're consistent, then you scale up. Then 1 trade a day, 2 trades a day is really all you need. All right. So with this morning's trade, we did, as we always do, a call put scenario. Let me go ahead and launch the charts. We had a sizable distance between pre-market low and our first target low on SPY, and then we found the halfway point. So a 50% retracement between pre-market low, at least what we had for pre-market low, and our first target low, which was all the way down here. We never hit it. You guys see, we're having an alert there. And then we had a bunch of targets high. It started with 3, but once we get through level 2, we start adding more. Every one of which we took out to the upside, but every one of which at one point or another held as resistance along the way. So the argument still is that do resistance and support levels work? Yes, they do. So put scenario today, and this was being a little bit conservative. I know you say it's not conservative, or you probably think it's not because it was the opening candle. Okay, I get it, but we were trending down into pre-market, not an aggressive trend, but at the moment, lower highs continuing to trend down. This big candle here, unfortunate, kind of caused a little hesitation for several people, including myself. But put line was a close below 579.51. Calls were a move, a breach probably because we had price action above that, a breach above 580.09. That's it. That's what we were looking for. If we breached this line to the upside, we were hoping to at least make it to the pre-market midline. And if we got through that, really aiming for the pink line and or the next target high. Okay, all of those could be considered as take profit points. To the downside, our initial goal was to get close below this white line, which was support from pre-market, and hope that it makes it at least down to 578.83. We had an alert there. We hoped it would get there. It got there, moved a little bit lower down. Now I got stopped out at 935 because, well, we got to take a look at what the Qs were doing. Qs hit resistance up here and then sold off. And as the Qs were moving down, told everybody, guys, if the Qs close back above this area here, this resistance line, you got to stop yourself out of the trade. If you don't, you're hoping that we can come back down below this one and head one lower, but we never did. Instead, we put in a higher low. And at this point, even at 940, if you were still in SPY trade, you still could have got out with good profit. But that's when you need to start paying attention, saying, all right, the Qs are no longer playing ball with us, meaning they're no longer moving down. ADD opened very, very red today and started to dive down as well. So everything started to rotate to the upside within a couple of minutes of each other. It started with the Qs, started with SPY, hitting a bottom down here, but the Qs really started the actual trend change at 940. That's when we put in a higher low on the Qs. Okay, so the move down, we closed below support, and we're hoping to make it down to the next 50% retracement, support, whatever you want to call it. We did close below that eventually, so we were really hoping that we'd go down to the next one. Qs weren't having it. ADD started to rotate to the upside. Puts came off the table because we were no longer trending down anymore. No calls here because we were still talking about in managing for some people the put scenario. But we saw that the Qs had been getting their way up to this nasty resistance area up here. We pulled back from that area, put in another higher low. Guys, higher lows are bad for puts. I know it felt good to play puts here, especially if you have a put bias. Or, you said, hey, that's an aggressive move down. Hey, look at this awesome resistance. Maybe it's going to continue down again. That's fine. If you have that bias, just remember higher lows are bad for puts. So if you were in puts up here because you trusted this resistance or whatever the case, was not my suggestion, because we're putting in higher lows on Qs. I'm expecting resistances to fail, not hold. Now we get up here. No, I wouldn't buy calls up here simply because leading into the open, that ended up being a pretty strong resistance area. Likewise, we reject it, but we don't make it all the way back down to the support that we just came from, which tells you that the buyers are getting stronger. You don't want to be it's like pissing in the wind, okay? Higher lows, especially when you came from down here, the buyers moved up to here, then they moved up to here, then they moved up to here, and then here. And you guys, if you remember that one rule, just make it that one. It will change the game for you. Not every time that we put in a higher low are we going to break resistance, but way more often than not, you do. Okay? Now, I have people in my community, including myself oftentimes, that will get into my calls a little early, assuming that this resistance is going to fail and that we continue up from here, because statistically speaking, we do. At the same time, ADD was on an uptrend as well. So you should have been looking for calls at this point. Why wasn't I? Because I made 54% on my trade this morning, 53%, 53.3. Many people took puts with me this morning and they were done. They were done 3 minutes, 5 minutes into the day. Several people played the return to the upside and were done by 10 o'clock in the morning. This is the golden time to trade. And if you could take advantage of any of the great moves we often see during the first 30 minutes, you don't have to subject yourself to this kind of movement. This is painful. When there's no direction, no trend, bunch of lines of resistance and support all over the place, it's hard to be confident in what you're doing. Okay? Now, never once after making this V shape right here were we talking about puts. Okay? Not once. So guys, the market's very green. Qs had a great day to the upside, continued to chop its way up, started to get some cleaner moves much later in the day, specifically while I was at lunch. Then we moved sideways for a bit, pushed up, slow grind into the close, and then sold off. But that's not the point. The point is we took advantage of what seemed to be the cleanest moves for the most part in the morning. And that's pretty much it. I don't trade after 12 o'clock. We start to talk about other things after 12 o'clock, whether it's, today we were talking about the wheel strategy and things of that nature for people who are looking to make some passive income. Or I help people with the emotional side. I get some questions. I get questions asked all the time. Jimmy, how did you deal with this when you were learning how to trade? How do you do this? Why do you do that? Where do your levels come from? All these things, okay? So it's not always about the chart, because when you get into a chart like this, you don't want to be talking about the chart, because what happens is when I start talking about the chart and I start talking about price action, somebody gets it into their head that I'm insinuating that we should be taking a trade, when in fact, I'm suggesting we don't do anything until we get below this line or we get above this line. Okay, but when we're chopping around, bouncing around in a channel that's barely a channel, or one that's dirty as hell, I'm not trying to promote trading. Okay, and then later, after we get back from lunch, data is too aggressive. It's too aggressive, and there's a lot of unknowns. But with that said, I got nothing else. We had one good entry to the downside, several good opportunities to the upside. If you trade later in the day and you follow the rules of higher lows, higher highs, trends, stick with the trend. Don't counter trend trade. If you're going to, remember the 2 criteria to do so. Break the uptrend line or the downtrend line, and then take out a level of support and or resistance, depending on whether you're looking for calls or puts. If it's a counter trend trade, aim for the next level of support down. If you're buying puts during an uptrending day, don't push your luck. Go from one support to the next support. Look left to find out where those levels are. Okay? With that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There is a link down below. And today, the ratio was 3 to 1. 3 to 1, 4 to 1 almost. I think it's 30 red, 102 green, something like that. So good day all around. And that's pretty much it. So thank you guys for watching. Till tomorrow, I love you.